Thank you so much for coming in today. This is FSI202, Digital Asset Management, Bridging 2.0 and 3.0. My name is Lillian So. I've been with AWS for about 8 years. Started in the fintech space in about 2015, and that was a very easy pivot into crypto and DeFi. And I'm super excited to be talking to you today about what AWS is doing in the fintech space and the Web3 space as well, and how we're actually bringing you solutions to bridge into Web3. So if you're in this room right now, you're probably in a financial institution that's looking to diversify your investment portfolio, looking at ways to enter into the Web3 space. I'm going to be sharing about specific startups that we're working with in the ecosystem today that can help you to do that. But first, what I'm going to do is I'm going to talk to you a bit about how AWS is actually supporting the Web3 ecosystem, how we're working with these startups, the common use cases that we work with, and also the challenges that we're seeing with enterprises that are trying to adopt Web3 technologies. I'm going to then bring on stage some of the startups that I work with that are actually in this space, Propine and Cake DeFi, some of the premier innovations that we're seeing in this space, and we're going to hear a little bit about their solutions and how they're helping financial institutions. So what is AWS actually doing in Web3? Well, we're here to empower the builders of the next wave of the internet and to redefine the internet. And what this is in reference to is when you had Web 1.0, which was basically just these clunky static pages. There was no ability to engage or interact. Everything was in Times New Roman. You then had the next wave of Web 2.0, which went from read-only to read-write. So now you could engage. That's where all the social media platforms came in. You could post that photo of the Starbucks that you had in the morning. And now what we're doing is that we're moving into the next wave, which is Web 3.0. And that means that you can read, write, and own all of the data and transactions. And there's the element where blockchain comes and brings in the immutability and the ownership of all of that Web3 and that system. So how AWS has been empowering Web3 is that we're working with all of the different startups in this ecosystem that underlies the Web3 space. And we help them with different programs to get them started building on AWS. So things like cost optimization, product development, data and analytics. And once we have a foundation with them, we then move on to actually help them to scale and leverage different programs to do go-to-market and joint selling. And so if you look, there's actually a lot of different players all across Web3, up and down the stack, and there's 4 key ones that we work with. So you've got the layer 0, and that's interoperability between different blockchain networks. And then layer 1 is where you probably are most comfortable with. You've heard of the networks like Ethereum, Bitcoin. All of those are layer 1s. And then you've got the layer 2s, which solve the scaling challenges in the layer 1 space. So think about increasing the number of transactions. There's also some infrastructure challenges that folks have and have developed solutions for to build in Web3. So identity and access management, wallets, things like that. And then in the layer 3 space, you have all of the actual DeFi applications that are built on top of all of these different layers. And we work with all different types of companies, from the centralized exchanges like Binance, Coinbase, CoinHako locally. We work with Ava Labs in the layer 1 space, and also homegrown Zilliqa, which is a layer 1 blockchain that was incubated here in Singapore. There's also folks in the infrastructure space like Web3 Auth that provides identity and access management for Web3. And what we do at Amazon to bridge our startup ecosystem to the enterprises is that we work hard to understand what our enterprises need. So we have this framework called working backwards, which basically means that we sit down with the enterprises, we try to understand what their big problem statements are, what are the challenges they're trying to solve, what are the personas that they're targeting in Web3, and help them to bring either solutions that are available in the market through our startups, or to help them with infrastructure solutions. What we've heard from these enterprises is that there's 3 main things in the Web3 space that they need the most help with. So the first one is how to monetize this, how to create new investment vehicles, how to then create tokenizations and trade different assets that historically people haven't had access to, and democratize access to these assets. The second one is how can they build a community and engage their users through either the metaverse or creating NFT memberships for loyalty. And the last one is really how do they even start to enter into this Web3 space with securing their wallet on-chain. So I'm super excited to bring you today 2 solutions that can help you come into the Web3 space within the startup ecosystem. I would love to first bring onto the stage Tuhina, who is the co-founder and CEO of Propine.
Good afternoon, ladies and gentlemen. I'm Tuhina, co-founder and CEO of Propine, an MAS-regulated digital assets custodian. Propine's vision is to build an equitable, democratized, open financial system which is secured by digital ledger technology. And we do this by providing a fully integrated custody, trading, yield generation, and tokenization platform. Now, why is Propine thinking specifically and we're so devoted to this type of vision and mission statement? That's because we have a certain view of how the future will evolve. We believe that DLT is at a tipping point. Over the next 5 years, we expect that DLT is going to replace large swathes of capital market infrastructure. And this information is corroborated by World Economic Forum in a report that they published last August. As per them, 10% of the world GDP will be transacted over DLT over the next 5 years, by 2027. That translates to $24 trillion. Let that number sink in. $24 trillion worth of blue ocean market over the next 5 years. Every year, $1.7 billion worth of investment is going into DLT-related projects in the financial markets alone. So why are people making this type of investment in this market? Why should you take note? Why should you care about this? That's because over the last 10 years, the capital market players have been working, tinkering on the sidelines, on the margins, trying to make 10% improvements. But now, with the advent of DLT, you actually have a shot, a once-in-a-lifetime shot, to make 10x improvements in efficiency, resilience, and inclusiveness. Now that we understand what this future holds for us, we should try and understand what got us to this present moment. What is that history behind the markets? So the genesis of the crypto markets has been in retail traders trying to capture the volatility of the crypto markets, trying to generate the alpha, which means that all the focus has been on developing the infrastructure around trading, right? Unlike all other asset markets where people first think about how do I secure, how do I store an asset? In this market, the conversation directly leapfrogged into trading aspects. The regulation followed suit. Whether you see the PSA in Singapore or any other jurisdiction, regulations have primarily been developed around KYC, AML, travel rule, trading and dealing. In Singapore, it's called DPT, right? Another key aspect has been that we've been working with retail traders mostly. There has been a lack of institutional players in this market, which means that risk management or governance hasn't really been the core part of development of the solutions. Now, what does this mean? In this entire context, the crux is that people haven't really understood why do you need to think about custodian, a licensed custodian? Why does it need to be part of your solution in the first place? Right? Another important aspect is the concept of decentralization. Now, this is very important to understand, right? We keep hearing the word DeFi so much. Decentralization is a highly abused, massively misused term. Okay? There are two major types of players in this industry. As Lillian before me said, there are the decentralized protocols and applications. Now, this set of players And this is, Yuzen is going to come on stage after this. Cake DeFi sits squarely in this space. These type of entities in this space, they are decentralized in the sense that they are open, they are auditable, and they are publicly available, right? But the con is that they tend to be difficult to use. They put a lot of onus on the users in terms of technical expertise, in terms of security expertise, right? And they offer no privacy. To manage these cons, a second set of players came into being. These are the centralized service providers. These centralized service providers provide access to this DeFi world, right? And they tend to be very convenient to use. They tend to be private in nature. But because of that, they are opaque. They are inaccessible to external scrutiny. The problem comes when these centralized service providers garb themselves as DeFi players, right? They're like, hey, I'm a DeFi player. I don't need scrutiny from external players. I don't need to be put under any kind of regulation. I don't need to be audited. That's when they become the weapons of mass destruction, whether it's FTX, whether it's 3AC, or any other names that you may have thought about, right? Now, this is the context which precipitated the great meltdown of 2022. Now, if you look at any failure for last 1 year, there have been 5 key themes. The first is this lack of investor protection. There have been very poorly designed legal frameworks that have been very massively one-sided. There has been no risk management or governance frameworks to talk about. And there has been rampant misuse of capital funds from the customers, right? Now, all of this has got us into this today's world, which is basically the market going through a major great reset. This great reset, what does it mean? It basically means that we're getting back to risk management 101. It means that people now understand that custody is absolute prerequisite. It is foundational to creating any kind of digital asset strategy. Now, this is also a secular trend across the world, okay? Now, what does institutional digital asset custody mean in the first place? Generally, people think it's about securing your private keys, right? Perfect. But it's important to note that this is just the starting point of creating a robust protection. A very important point, but only the starting point, not the end of it all. I can spend 30 minutes talking about the slides. If you wanted to know more, reach out to me separately and we'll have a conversation. Now, Propine was created for exactly this world. We were set up in 2018. We went into the MES sandbox in November 2019, exited in Jan 2021 with a capital market services license to custody crypto, NFT, stablecoins, digital securities, and fiat, all from the same integrated platform. And last year, we received an PSA exemption to be able to do fiat ramp-on, ramp-off for the digital assets. We're a B2B player, and we do have B2B2C type of clients that are working with us as well. Every aspect of Propine infrastructure has been validated, audited, scrutinized by external third parties, whether it is the technical infrastructure or whether it is financial, regulatory audits, whether it is operational or risk management frameworks, governance frameworks, everything has been audited. We're ISO 27001 compliant and hold an SOC Type 2 certification. And we also have insurance in place from Lloyd's of London. Now, a quick word about the infrastructure. So the first phase of our infrastructure, right, this historical infrastructure, was what was considered the gold standard of the space, right? There is a hot and cold infrastructure. We've got, we used to own Thales Gemalto HSMs. They were stacked up in Singtel data centers. Highly unscalable solution, unavailable and very unresponsive to the customer requirements. From there, we moved to just before pandemic, we moved into this completely cloud-based solution. And this solution is based on AWS cloud. It is highly available, highly scalable, very, very responsive to the capital market requirements. So why did we choose AWS as our primary infrastructure provider? The first is that AWS has a suite of product offerings that meet pretty much all of our needs. a very, very mature ecosystem to work with. AWS offers unparalleled support for monitoring our infrastructure, making sure that our infrastructure stays up all the time. Very high on reliability. It is very easy to integrate with other AWS services once you are on board with them. And third-party library support is excellent. And I think very importantly, we find that AWS technical support is far better than any other tech company that we've worked with. In general, we found that the technical support we receive creates solutions in the first attempt. And what's more, we receive feedback from them constantly on how to improve our infrastructure, which is invaluable from our perspective. And finally, it has many options for managing DR and backup. Now, there are several components of AWS solutions that we use, but at a pretty high level. Let's see, for example, our identity, right? Our identity solution is tightly integrated with several AWS solutions. For example, we use Cognito, AWS SSO, and we use client VPNs. To develop a highly secure and auditable and automated CI/CD pipeline, we use AWS ECR, we use Amazon Inspector, we use ECS services, and on top of that, from a security point of view, we use Security Hub, we use GuardDuty, CloudTrail, CloudWatch, Detective. There are several of these solutions. And we use all of these suite of solutions to ensure that at all times, Propine infrastructure is at the highest level of international standards, like those prescribed by NIST, ISO 27001, and SOC 2 Type 2 compliance. If you would like to know more about our solution, I'm here. Please reach out to me. Happy to talk about it. Thank you very much for your time and your attention. And now I would like to invite my friend, co-founder and CTO, Cake DeFi, Yuzin Chua.
Thank you, Tuina. That was a great talk. Hey, everyone. I'm Yuzin Chua, CTO and co-founder of Cake DeFi. I've been in the space for over 13 years, and from the start of Bitcoin to now, so I can consider myself kind of like a dinosaur in the space, from only Bitcoin, and then came Ethereum, and then all the way to where we are today. And we're seeing the evolution of crypto from largely retail, some engineers or some developers, some techies in the bedroom just trading some cryptos, and all the way to now attracting a lot more institutional players in the space now. So I've seen the ups and downs, the cryptos market ups and downs, and all the security issues from Mt. Gox and all the way to FTX of today, so I've seen it all. So at Cake DeFi, what we do is to create a very user-friendly way for consumers, everyday people, to get into crypto in a way that's very safe, very secure, very transparent, and very provable. So everything is on chain. But I'm here today, and not to talk about the retail arm, but to talk more about Levain. Before we get into that, so I'm just going to give a bit of a high-level overview about what DeFi is. And DeFi stands for decentralized finance, and Tuina has covered a lot of that already, so it's going to be a little bit faster here. So DeFi, it's basically a collective term that refers to the financial solutions that are available on the blockchain that parties are using it to transact between one another without any centralized intermediary. So you can do like swaps, you can do exchange, you can do tradings, and you can do lending and all that in a very trustworthy and very open manner. And as we've seen, so crypto started around 2008, 2009 with largely retail in mind. And a lot of the tech that is designed in the crypto space are built for retail. And then came institutions. So institutions came into DeFi, wanting to also get a piece into this interesting pie that we all have been having access to in the retail space. So institutions are now getting into the space as well. So we're seeing more DeFi institutions getting into DeFi space. And we've seen like banks, and we've seen crypto funds, and we've seen also traditional funds, family offices getting into a piece to crypto. Also regular companies having cryptos on their balance sheet as well to kind of like hedge against the economy. So all of that, a lot of institutions get into the space, but a lot of that is using the consumer tech. So a lot of institutional tech is still trying to catch up on all these players into the space. So I'm here today to talk about for institutional side, what are we looking for to build a great solutions with AWS as the foundation? How do we build great solutions for institutions? So why are institutions turning to DeFi? Largely because DeFi it's available 24/7, unlike any traditional financial institutions. You can trade all the time, you can do lending, you can pay back a loan, everything available every minute of the day, every minute of the week. And liquidity is really, really great on DeFi. If you want to trade like $10 million worth of assets, I mean, you do that as a large institution, but not as a retail users. If you want to trade that kind of volume, for any traditional asset, you would go to a bank, you would go to like private traders, OTCs, and all that. But on DeFi, the depth of decentralized exchanges are so deep that if you trade $10 million worth of assets on DeFi, you're not going to move the market much at all, and that's a fact. So DeFi, the larger it gets, the larger it attracts more institutional players into the space. And the larger as well, institutions are looking for more solutions that can address all these issues and all these potential security issues and gaps that are to address all these institutional requirements. So our mission here at Cake DeFi with our product for Lavane is to provide a very self-custody solutions to provide an end-to-end security to our customers. So customers of Lavane get full access and full custody of their cryptos and their wallets and their keys all at their end. And it's not only taking our words for that because that's provable from the customer's point of view that it's all 100% safe, that we have zero access to the fund and to the keys and all that. And also one key thing as well for a lot of institutional solutions is that a lot of solutions out there that build it in a way that assume that every company runs the same way as yours. But that's not the case because every company, every banks, every institution, every funds are completely different from one another. So we know that every single company is going to need a very different requirements on the policy settings. That's why we have all these rules that we set on the company policy and all that. So Lavane has the solutions for all of that. We have a very, very flexible policy engine that can support every operational needs for every different requirements for different companies, different funds, and different banks even. So that's all part of the core requirements for us. And our mission for Lavane is to be the foundation for institutional success in the DeFi space. Foundation meaning not only on the custodian part, but also including the building. So in the future, our goal, our mission is that anyone that want to look into building any DeFi solutions or crypto solutions or blockchain solutions or Web3 solutions, you will be going to Lavane for the great use, for the great access into nodes, into APIs, into custodian solutions. So it's going to be end-to-end, full from the ground up, everything that you need to build a DeFi solutions. So we have straight first tenant, DeFi, and Web3 access on Lavane. And a great thing, single tenancy, which is often overlooked by many parties because I believe that today, Lavane is probably the only one out there that provides single tenancy solutions for crypto custodian. I'm going to explain a little bit more about what single tenancy means. Just going to move forward here. So today is AWS Summit. So AWS has been one of the core foundation of how we build Lavane. Why we chose AWS for this is because AWS has proven itself over the last more than coming up 2 decades now with AWS around, and AWS has proven itself to provide a very easy access, very reliable access to technology, very, very flexible, available globally. And the cool thing, the key thing for us as well is single tenancy support. We're going to get into a bit of the details there. And Lavane uses many AWS and Amazon services to build our solution. So these are the four key services that we use to build Lavane. I'm going to cover some of that. So AWS Construct, AWS Key Management Service, AWS Fargate, and Aurora. Before I get into the details, I also want to point out one thing, that I think the way that we build Lavane, it's very, very similar to how Amazon comes up with AWS. So we have a provable, successful business for the last 4 years now with Cake DeFi, providing retail access to DeFi in a very user-friendly and secure way, and everything's fully transparent. And we have been getting requests and inquiries from companies that want to get access to the same solution that we have in providing secure solutions to our customers. So what we do here is to take out the core of what powers Cake DeFi, that we call it Lavane, and offer that in a provable, in a safe way for many other companies that are also looking for the same solutions like us. Just like how AWS is also comes out as a part of Amazon.com, which is provable over many years, cut that out because a lot of companies will also require the same solutions. So AWS Construct allows the engineers to define infrastructure as code. Infrastructure as code, it's very, very important because a lot of the times code are only defining the application part, but also infrastructure is also very important because it allows every infrastructure upgrade to be versioned and to be reviewed, and also part of the core management changes, because that's also part of the requirements if you run a custodian tech. Under many jurisdictions, it's going to be required. So AWS Construct allows us to define infrastructure in a way that compliant to all that requirements, and allows the engineers and the team to be able to scale and develop very, very fast, because it allows us to manage infrastructure across multiple customers in a way that's scalable, in a way that's consistent as well. Every single customer will have the same setup, and also including a test environment, including local environment. Everything is clearly defined, fully testable. Self-custody wallet backed by AWS. One of the core components for self-custody wallet is it's powered by KMS, AWS Key Management Service. So AWS KMS allows us to have access to HSM, hardware secure module that's already have a FIPS compliant. So this allows us as a company to build this great solution that our customers can trust without having to worry about all that, getting certified and all that, because we already have that from AWS, so we can continue to build that and offer that solutions to our customers. And access control layer, which defines the policy engine, sits independently and in a serverless Fargate situation. So that allows everything to be also very, very safe from the rest of the deployment. And one of the core things I want to point out is single tenancy architecture. What that means is that every single customer of Lavane sits on their own AWS account. So which means that you have your own server, you have your own database, you have your own nodes, you have your own everything. And there's zero chance of any data corruption with any third party, with any other customers of Lavane at all. And I strongly believe that we're probably the only one out there that's doing that today. This is also the same, kind of the same way as how AWS runs it as well. And this ensures that your neighbor that's using like Lavane could be farming and like CryptoPunk, and you're there trying to trade $5 million worth of Bitcoin. You will not be affected by that because you have your own Ethereum node, you have your own Bitcoin node that you can transact. So whatever that other customers of Lavane does doesn't affect you at all, and your data is truly, truly safe. And that's what that's one of the core building blocks of why we built Lavane. Lavane is a great way to, it's a gateway to DeFi institutions. So what we provide is a self-custody wallet, a great flexible policy engine, a direct DeFi access, portfolio management, and single tenancy support. If you want to learn more about Lavane, check us out at lavane.tech, and you can talk to our friendly team as well. We're going to be stationed at the startup loft there with the team, Sydney, Annie as well. So we've got a couple of team of us here. So if you want to learn more about us, I'm happy to talk with you. Yeah, with that, thank you, and enjoy the rest of the session.
Thank you so much, Yuzin and Tuhina. They're the reasons that I love my job and working within the startup space. They're truly the founders that are innovating in Web3 and bringing you the latest technology. So a few housekeeping items before we close up here. If you are interested in kind of getting your feet wet with AWS services, recommend you to take a look at our AWS Industry Quest. This is a training program that kind of gamifies financial services use case. So you build very specific projects like eKYC, different things like that, and you can actually learn AWS services as you move along. There's also a skills builder, so that's for more broader level use cases. Again, a sort of training that you can come into this digital platform and get your feet wet on with AWS. If you enjoyed the session and if you're just as excited about Web3 as we are, please give us a rating and rate us 5. And thank you again for your time and attention today. Have a great rest of your day at Summit. Thanks, folks.